Welcome back. You're tuned into Bazaar Morning Call and hope you're having a good morning. Well, let's welcome our fundamental expert. We have Dipan Mehta of Elixir Equities who joins us on the show. Hi, Dipan. Good morning. First of all, a very, very happy new year and wishing you, your family, all the very best in the coming year and looking forward to hearing a lot from you all through the year. Well, Dipan, let's talk about a few stocks though. The pain point has been consumption, but a couple of themes could still stand out from the consumption basket. Maybe pizzas could do well, alcohol as well. The stocks have done quite well and they have some tailwinds in store as well. Given the kind of festivities, the good close towards the end of the year, anything you like from there, be it from the hotel space, the alcohol space, some of these food consumption stocks?
Yeah, Nigel, good morning and thank you for having me on your show and New Year's wishes to entire CNBC family and all your viewers. It's going to be a great year. So, I think specifically to your question, yeah, I think that there are certain pockets of growth within the consumption space. And within the hotel industry, there's one company, again, disclosure when we are talking about stocks, which comes to mind is Lemon Tree Hotels. And the reason we like this stock is because of its aggressive, strategy to expand the managed hotels segment within their business. And the number of rooms are going to double over the next 2-3 years, largely out of management contracts. And these management contracts generally have a very high profit component in it and do go ahead and improve the return ratios as well. So optically, it appears to be expensive, but as and when these hotels go on stream and come under the revenue, position, the company's performance should improve significantly. And within the alcohol space, it's better to go with the regional players, the Indian players. I think there's good scope over there. Again, usual disclosure. I think two companies, Som Distilleries and Tilak Nagar, are still at reasonable valuations. I think the best performer could be Radico Khaitan.
Okay, got that. Yes, Dipan, good morning. And again, Happy New Year on my behalf as well. A lot of experts on the channel have been speaking very positively about alcohol companies. Let me shift gaze to the finance sector and the news that's coming in. Basically, it's a live mint report. And I think it's correct from what I could check with sources in the microfinance industry. The SRO, the self-regulatory organization, this has not come from the regulator. The SRO MFIN has told people that, we had told you should stick to only 3 lenders sometime in June or July. And now they have said that, okay, we will push the deadline to April 1st. Until then, you can have more lenders per borrower. Is that a good thing? I mean, isn't it a question of kicking the can lower down the road?
You're right, Lata. I think a lot of disappointment with microfinance companies for I would say, without any reason per se, the NPAs are going up. Earlier if there was a drought or there was some turmoil within a region, then the NPAs would go up. But here, I think across the board, across the country, across all MFINs, we are seeing these NPAs go up. And it's certainly giving a lot of thought to their business model. I know they have very high net interest margins, but this, creeping up of NPAs every 2-3 years, 5 years or so, does put a cloud on the business model and the risk management practices. And you're right, this is kicking the can down the road. I think a lot of, I would say, improvements are required in the MFIN industry to ensure its sustainability. It's a very important segment within the banking industry because it caters to the absolute people below the poverty line or thereabout. So from that point of view, it's a very important economic role to play. But I think a lot of reforms are still needed in terms of lending practices, collection practices, and especially trying to improve their risk management strategies and parameters.
Yeah, to be fair, IndusInd, of course, announced that they have sold a large package of their MFI loans to ARCs. So they are proactively cleaning. I don't know whether this news will impact all the companies equally. I think IndusInd... Yeah, sorry?
No, Lata, it's all right to clean up. But why did it happen in the first place? As an IndusInd shareholder, I'm going to suffer a huge loss because of this sale, which is going to take place to ARC. So I think it's extremely disappointing, and we have investments across the board in a lot of these microfinance companies, Credit Access, Pandana Spurti, and some of the banks through IndusInd Bank as well. So it's been extremely disappointing, to say the least.
No, I take your point. I mean, I'm not condoning what has happened, and it's a separate story to check out what led to perhaps this overlending. And we have heard stories of some people having 4, 5, 6 loans per head. So that clearly is reckless lending. But
Dipan, there are two sectors that you have been quite tepid about, or quite negative about in the past year. Both the sectors that I track, metals as well as cement. But there is some hope that maybe after a very, very weak 2024, things could look a little bit better in 2025. The underlying demand will have to improve. Do you believe so? And if not, between the two, will you be relatively more bullish on which sector?
Yeah, Nigel, it's just, historically, these sectors haven't done well for us. Perhaps we need to understand them better. But end of the day, whether it's metals or cement, you need to have that trader mentality to be buying these stocks, because if you get the cycle right, then you could get very good returns. But these are not great stocks for long-term investment perspective, at least not from this point on, considering the kind of capacity buildup taking place within both the sectors and the kind of competitive, intensity which is there within both cement as well as steel, especially from imports as well. So sure, there could be a nice trading rally in these stocks. Their price earning multiple is certainly attractive. The base effect means the entire last year has been pretty slow for both the sectors. So when the profits get announced, the base effect will be an advantage, and they may show decent growth as well. But such growth rates aren't sustainable. End of the day, the underlying volume growth for both the sectors is just a single digit, could be sometimes below 5%, sometimes above 5%. And that doesn't really interest us from a long-term investment perspective.
That's a persuasive argument, Dipan, though, of course, cement, one hopes, has more hopes with, perhaps the housing sector still doing well. But Dipan, I want to ask about consumption. You heard the auto numbers, looks like a mixed bag, though Maruti's small car has finally kicked off, but two-wheelers not doing well. Just give us the entire picture. What would be your pick of the pack?
Well, Lata, I think it's still need to be cautious on the consumption investment theme per se. And Maruti's sales numbers, I think we need to go a bit deeper, whether it was a base effect or what was the real reason, because that was a complete surprise. So I want to comment over there. But by and large, I think the first numbers coming aren't that impressive for the December quarter. I mean, look at GST collections, auto sales for December, and the earlier months also have not been that great. So we should brace ourselves for a very tough December quarter earnings. And that may cloud the sentiment in the stock market, because consumption is a very important investment theme. And at the same time, we are not seeing adequate pickup on the capital goods side as well. So I would say be a bit cautious on the entire, and on these two, at least these two investment themes.
For Maruti, also the exports did very well. So the export growth was 39% at about 37,400 units. And the company also said they reported the highest ever retails. I'm reading a Nomura note on the auto sales. Maruti has reported the highest ever retail sales in the month of December, and it has only 9 days of stock at the dealership level now. So Maruti's stock was up 3.2%, and the numbers and the commentary seems to be very, very upbeat over there. Dipan, what about the hospital sector, not hospitality? We were chatting with Jupiter Lifeline today, or yesterday it was Kim's. They're all talking about expanding their bed capacity significantly. The average revenue per occupied bed has also been slowly inching up. Occupancy levels are decent, 60-70%. Are you bullish on hospitals going into 2025? And if you have a preference?
Yeah, Rima, I think it's a good defensive sector, especially when you see the economy slowing down, consumption slowing down. I think it's a sustainable business, because healthcare spends generally do not go down. They are on a secular basis, they are rising. Our preference would be for the largest company in the sector, that's Apollo Hospital Disclosure. We and our clients are invested. The reason for that is that, right now, all of these smaller hospital companies are doing well because they don't really have a large greenfield hospital coming on stream. The minute you have a large greenfield hospital coming on stream, it tends to depress the profitability for a few quarters at least, because setting up a new hospital is a long gestation project, and it takes several quarters for the hospital to start contributing meaningfully. Whereas for Apollo hospitals, it is very easy, considering the size, that they can easily set up a greenfield hospital as they're doing in Worli over here, whereby it will not impact the performance as much. And also, I think the other businesses, the pharmacy distribution, the clinical testing, they also are growing very well. So although it's the most expensive hospital stock within the sector, but I still go with Apollo Hospitals rather than some of the smaller players.
So we have to ask you about hotels as well. Hospitals done, hospitality. How do you like them? Lemon Tree, Indian hotels, all of them have seen a decent run-up.
Yeah, absolutely. I think, and these are stocks worth holding on for a longer period of time. Indian hotels, especially, is benefiting from this extravagant wedding season as well. And I'm sure should report exceptionally good earnings for December quarter. But a dark horse could be Lemon Tree, as I said, because of its focus on management contracts, which is a high profit, high return business. And in terms of capacity addition, I think Indian hotels and Lemon Tree have the best dynamics in play. So I would just go with these two companies. There are other smaller hotels, but their expansion plans are not that impressive or aggressive.
Dipan, I'll come to Jubilant in a bit. I wanted to ask you even about some of the early banking numbers that we have got. The deposit growth seems very good for CSB Bank, for instance. South Indian Bank, not so much. Any of these small banks you like? Karur, of course, has been an outperformer in 24.
Yeah, I think Lata, the time is ripe to review all the banks, especially second tier 2 PSU banks, some of the old private sector banks. If you see their numbers, their growth rates, they are now inching up towards what the new generation private sector banks were reporting, but valuations are still at a steep discount. And it's a sector you need to be equal weight or at least neutral weight. And from that point of view, I think if you have to increase exposure to the banks, then the good way would be through these tier 2 PSU banks or these other 2-3 old private sector banks, because there's a scope for the valuations to be re-rated higher, and that could provide the alpha if you compare to the banking index. So yes, I agree with you, very positive on these banks. And the gap between the private sector banks and the other banks is narrowing very rapidly. And I think therein lies a bit of an investment or even a trading opportunity.
Okay. Just very quickly, Jubilant Foodworks, do you track it at all?
See, Lata, once you got Zomato, then you don't need to buy anything else. None of the QS.
They will deliver the pizzas, huh?
And if you don't have Zomato, then go for Swiggy. I think these are two must-own stocks. I know they're very expensive, usual disclosure over here. But, rather than go with the winners rather than, where there's some uncertainty about how the sector will evolve.
Okay, all right, Dipan, thanks a lot for joining in today. Wishing you a good day ahead. And as I said earlier, we'll chat all through the year.